welcome to NTV Profit. Joining us today is Mr. Shailesh Chandra. He's the MD for Tata Motors' PV as well as the EV business. He's speaking to us after a media roundtable where he gave the company's outlook for FY25 and beyond till FY30. Mr. Chandra, welcome to NTV Profit.
Thank you.
So first up, it has been quite a turnaround for Tata Motors' PV business, so to speak. You're a debt-free company in India. JLR is supposed to be debt-free by FY25. How has the turnaround happened from the time when JLR was almost said like the crown actually rests heavy on Tata Motors?
So, I would talk about the PV business. We were at the rock bottom level in FY20. We were down to 4.8% market share, doing some 133,000 in a 3 million market. And since then, we have pivoted around the product first, which were in any case very strong products, very well known for the design. So what we did is series of initiatives on the front end which helped us to lead brand campaign to build association of our products around safety, stylishness, and superior tech and performance. And we really put a lot of effort behind that. But more crucial was to engage our dealers who were not making money. So we took series of initiatives to ensure that they made money. Just 30% of dealers were making money, and over a period of time, more than 90% of them started making money, and therefore their engagement really helped us drive demand, along with all the efforts that we were doing on the product side. And we have ensured that each of our product did well in their segments. So most of the products today, if you see, are in the top 2.
Yeah.
So this has been one of the, but greater, I would say, I would like to attribute it to the series of agile decisions that we took on the way in terms of capacity expansion, managing the semiconductor crisis and so on. I think that has been the reason behind this turnaround, and a very dedicated set of employees and business partners, I would say.
Okay, you mentioned about the top two SUVs. That's the Nexon and the Punch, which are the top 2 SUVs in India as of now in terms of sales. Let's move the conversation forward to what lies in the future. What is the product roadmap looking like at FY25 and onwards towards the end of FY30? I mentioned FY30 because you want to arrive at a market share of 20% by that year. So how are you going to achieve that? I mean, it's going to be a 6 million unit market.
See, today we are at about 53% of the addressable market. And within this 53%, we are 26% market share. So we aspire to take it up to 80% addressable market by FY30. And if you just do the calculation about 25% market share, it would come to 18 to 20%. That's how the arithmetic is. This would essentially mean, so this is the aspiration. This would mean that you need to therefore come with nameplates in segments where you're not there. And we have identified those segments. The first 2 segments, the first 2 products or new nameplates which are going to come is Curvv and Sierra. And then there will be other additional products which we'll announce later on, which will come by FY30 progressively. As far as FY25 is concerned, you'll see actions in the EV side, where we'll be launching the Curvv EV and followed with Harrier EV. On the ICE side, you'll see Curvv ICE as the new nameplate coming in, and Nexon CNG also. Beyond that, you'll have model year interventions and certain products like Cafe Racer and so on that you're seeing. Okay. So this is the plan.
That is the product lineup for FY25 that you're mentioning. Right. That will go a long way in achieving 20% market share. You also mentioned something about the ICE business is now inflationary, whereas the AV business now becoming deflationary. Can you explain that something for our audience so that they can make their buying decisions more carefully, especially given how sticky the retail inflation of India has been? You compared that with the headline inflation that we are seeing in India.
Yeah, see, what I meant is from a cost structure perspective, we have seen even in the past 1 decade, if you see 2010 to 2020, where there were several regulatory interventions on safety and emissions which came. Every intervention leads to addition of tech and components, and that makes the trend inflationary. And that is primarily happening on the ICE side, which is emission, right? And for different powertrains, for diesel, for example, it has been more difficult.
And CAFE 3 also will come in now.
Correct. So this is one. So CAFE 3 will change the mix, the flavor of what powertrains become important. On the EV side, you have so many tailwinds favoring cost reduction, which is cell price itself. We have been seeing over a period of time a secular downward trend of that. We are seeing localization, PLI support to do that. So localization will also help in cost reduction. The aggregates are evolving. The EV powertrain aggregates are evolving. Whether we talk about power electronics, motor area and all, these are becoming efficient and cheaper. So when you take all this in combination, you will see inflationary trend on the ICE side and deflationary trend on the EV side.
Thank you so much for the explanation. Last couple of questions. The budget is also coming up. We know that the government has been quite supportive of the electric mobility push that it has given so far, given the carbon neutrality goals that we have. In that sense, what do you think the government should do next in the electric mobility space? Should there be a new round of subsidy? What about the EV policy that was recently announced, and how does that work in the localization aspect of EVs?
No, I think government has been very clear and very consistent in supporting the accelerated growth of electric mobility through different things like lower GST rate, FAME 2, and then PLI and so on. I think it should only be the continuity of these policies which should be helpful for the growth that we anticipate. FAME 2, for example, which ended on 31st March, when it gets replaced through a FAME 3, we expect continuity of the categories which were supported there. There should be, additionally, if I have to say, there should be more focus on charging infra. Because that is one of the key residual barriers. Otherwise, product is well accepted. Possibly electric vehicle as a product as compared to any other powertrain is much superior in terms of drivability, in terms of running cost, maintenance. So it is only the charging infra which is the key bottleneck. So a more greater thrust, greater participation of private players rather than just OMCs will help. And there are a lot of roadblocks in terms of installing charging infra, whether at home, whether in the public infra on the highways, getting a connection from a DISCOM is a long process. So I think if we can sort out these issues, it will be helpful going forward.
Okay. Finally, one last question. You are at your healthiest best, if I can say so, as far as Tata Motors is concerned, on the debt picture, on your free cash flow situation, your EBITDA margins. Is it now time to go global for Tata Motors' cars? I mean, you went global about 2 decades ago with Rover cars, and Indica went to Europe. Now, is it time to take Tata Motors' EV cars, electric cars, to Europe? I'm asking especially because there has been a pushback against Chinese electric cars in Europe as well as US. Do you see yourself filling that gap? Because now, I'm saying bring it to that context because even Hyundai India has announced its IPO. So, they would want to make India an export destination for their cars. So, do you see US and Europe as an opportunity for Tata Motors' electric cars, given the pushback against Chinese-made electric vehicles?
See, there are opportunities for us in the IB space in a big way because the products have matured to the extent that we are already, number 2, number 3, depending on whichever month you talk about, competing with most of the global players in the Indian market. So we have the ability to take these products globally, right? It's about where you would like to focus first. There's a big opportunity of growth that you're seeing in India, which is going up from 4 million today to say 6 million by FY30. And you are also trying to capture a higher addressable market. So there is an effort and investment that needs to go here. But specifically on electric vehicle, I think there's a bigger opportunity because
globally, you say?
Globally,
yeah.
Globally I'm saying, because see, most of the electric vehicles in developed countries are sold above $30,000. We have right now what products you see in our portfolio is all less than 30,000, all world-class products.
Yeah.
And we are investing big time on tech. So I clearly see an opportunity. I would not too much depend or even consider as a key part of our strategy the current trade barriers and all which have been imposed. We should never bank on them because they can always change. But structurally, I feel that we have an opportunity and we are actively looking into it.
So the time has come for Tata Motors' electric cars to go global?
I would say we are looking into the opportunity when we would have frozen our international strategy, hopefully in few months, and have got our board approval on that, then I'll be able to more openly express about it.
Surely, we'll look forward to that. Thank you, Mr. Chandra, for speaking to us so candidly, and congratulations on the media round we had, as well as the performance that the company is doing at this point of time. Thank you, viewers, for tuning in. This is Tushar for NTV Profit.